All right, what's going on, everybody? So today we are going to learn about SMAs and EMAs, which is basically an SMA is a simple moving average, and let's write it down here. And an EMA is an exponential moving average. What the difference between the two is that an EMA shows more recent price data, price action, while an SMA is kind of older data. You would use SMA, an SMA for like a swing trade or a long term trade. An EMA you're going to use for like a day trade, a scalp trade, a quick 15-minute trade. Okay, so I'm going to show you how they're both used today. And again, so also um, what these mean is, again, you have so many different kinds. I mean, there's 9, 21, 30, 50, SMA 10, 20, 50. For my trading style, and when you get more into this, you can find things for your own. You can go on YouTube and search different EMAs and SMAs and what's better for you, what's better for your trading style. Something might work for you that doesn't work for me, and something might work for me that doesn't work for the next person. So, but this is my trading style and this is how I use it. Okay. So I use, and again, the 9 and the 21 EMA, those are these candles right here. So that's the last 9 trading days. Okay. And then the 21 is the last 21 trading days, which is, 1 candle, 2 candles, 3 candles, 4 candles, so on and so forth. So the 9 is white and the 21 is red. You can change the color, so it doesn't matter. I'm just using white and red for the video. Okay, so let's go on a 5-minute time frame. Now, this is how I get my entries and my exits, especially when I'm day trading. We're going to show you how to. I'm going to show you how to do this here in just a minute. Okay, so again, hold on, let me make sure. I don't remember what it said. What the 9 was red, I think. Or no, the 9 was white. The nine is white. Okay. So basically, what you're looking for is anytime that we are below the EMAs, we're bearish. We're in a downtrend, and then anytime we're above both of the EMAs, we're in an uptrend. Okay. Now sometimes there's chop. There's like a choppy market. Like again, like on Friday, look at this. This is just trash. You don't want to get in on an entry. You don't want to get in on one of these entries because look at that. You just, I mean, you might have made some money here, but it's just you don't. You want to get in on a good, beautiful setup, and I'll show you what I mean. So for a short entry, anytime that this we had a crossover, so you see how the 9 EMA crossed over to the red EMA, which is a 21 EMA, and we crossed to the downside. So what you could have done is you could have gotten a short entry. Now, again, like I said in the previous charting video, it's the same thing with support and resistance. If you get a body, okay, so remember, this is a body and then this is a wick. If you get a body close above, you see how we had this. You see how we had this green candle right here, and we wicked kind of below it, and then the next one was a super red candle and wicked all the way down here. Okay, if the body would have closed like way up here, then I would have probably said, okay, we might start to trend back up. So I'm not going to short it, but the fact that we tanked basically on that next 5-minute candle, and then we came back up, we tested it. You see it right here, we tested it. You could have gotten a short entry right here, so you could have went puts. Now again, I'm going to show everybody how to do puts and calls for people that don't know how to do puts and calls, but just for the sake of this video, I'm just going to show you, kind of like a continuation to the course I did on support and resistance. And like I said, I'm going to get a ton more videos out, but just for now, at least people have this set up, and then we can start going into like actually trading and, this and that. Okay. So you could have gotten a short entry right here at 398.12 ish and rode it all the way down to 384, which would have been an insane move. I mean, if you were buying puts, you'd be insanely profitable off of that. Or, if you would have bought like an inverse or something like that. Now, what's if you kind of notice about these EMAs, Sorry about that. I had to stop the recording. Okay. But okay. So what you notice about these EMAs is that you see how they're kind of like a magnet to where price came down, then we retested it. See this wick right here? We retested it. We came all the way down, and then guess what? We retested it here before coming back up. Okay, so kind of think of it an EMA and an SMA as like a magnet, and more of the EMA than an SMA. But think of it as a magnet. You know, what comes up is going to come down. What comes down is going to come back up. Okay, so and again, you can see it for yourself that we came down, we crossed. Once you got that cross, you could have taken a short position. We tested it just to make sure we didn't want to go back up, and then boom, you could have slaughtered it right there. You see, before, again, like I said, remember, it's a magnet. And then guess what? We came back up. We tested it again. We came back down. And then if you start to notice here, what happened here? We got a crossover right here. So you could have taken a long entry right here, put a stop loss below this crossover, and then boom, we exploded to the upside. And then guess what? Since it's a magnet, we started to come back down again. You see what I'm saying? So again, um, this is truly a powerful strategy. If you can get the hang of it, and we can just go back in time and just look at some previous price action. I mean, again, look at this one right here. This would have been a beautiful trade, and this is how I get my entries and my exits all the time. This is how I'm making my money. Okay, so again, I mean, there was a lot of choppy price action right here. This actually might not have been a good trade just because it was choppy and there was really no crossover. But look at this. So we came up, and then again, since we got too far away from these EMAs, what did we do? We back tested it. Okay. Then we came up, and then we broke below it. Once you saw this crossover right here, it was a good time to get in your positions. And again, you can even see right here that we wicked up and we tried to test it to see if we wanted to come back, uh, come back to the upside, but we got rejected. So what you could have done is you could have put a short position right here, and then what you could have done is put your stop loss just right above this, just to make sure that, again, like I said, I mean, if you always want to put your stop loss just for in case we have that super crazy reversal and then it's like boom, you know what I mean? So you put your stop loss around right here, right above this little crossover, and if you get stopped out, you get stopped out. That's how it happens sometimes. But if you wouldn't have gotten stopped out, which looks like you wouldn't have, look at that move. If you would have won a short position from 421, you could have rode that puppy down all the way to 398. I mean, if you were doing puts, you would have made, man, thousands. You see what I'm saying? So that's what you want to look for. This is how I get my trades every day. Like I said, you want to wait for that crossover. Once we get that crossover, and again, I mean, sometimes you might get stopped out. I mean, if you would have gotten a crossover right here, you see that crossover, you would have put your stop loss right here. It came up, unless you would have sold, it came all the way back down. So it might have hit your stop loss unless you took profits up here. But again, that's what you're looking for right here. Is you're looking for that crossover from the 9 EMA to the 21 EMA, and then you want to put your stop loss in, and go from there. Yeah. So let's kind of look at some other data, just so I can just show you like a really good setup. I've been showing good setups, but just for the sake of just showing you more. This one was a crazy one. I don't know what the heck that was. Yeah, that was a crazy one. Look at that. So you could have put your stop loss right here, and then boom, explosive move. Okay, so we're done with that one. I'm going to show you now the SMA. Again, this is just for day trading. So now I'm going to show you kind of like for like swing trading and long-term trading. All right. So with the SMAs, if you you can kind of notice right offhand, look at how much further they are apart. You see what I'm saying? It's kind of, and this is the 5-minute chart. I was using the same 5-minute chart. So you see, if you notice in the EMAs, there was so many entries, there was so many crossovers that boom, boom, one right here, 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 one right here. You know what I mean? But when you're looking at your simple moving averages, I mean, look at how many crossovers there are. 1, 2, 3. There's not that many crossovers, and that's why I'm saying you don't want to use an SMA when you're trading, 15-minute scalp trade, the little quick in and out trade, a day trade, intraday trade, So when you're looking at the SMAs, this is when you want to get your big positions. Let's just say you want to buy, 50 shares of Tesla or 100 shares of Tesla. This is where you're going to want to look at, start looking at the hour chart, maybe the 4-hour chart, the day chart, and probably not you could look at the hour chart, but what I do is, and actually I should have said this in the EMAs. What I look for is I look at the 5-minute time frame, the 15-minute time frame, and the hour time frame for my 9 and 21 EMA. When I'm looking at longer term, I look at the 4-hour and I look at the day. And then if you want to look like at a big picture type thing, you can look at a week time frame or a month time frame. But let's just go into like a 4-hour time frame and let's see what that looks like. Okay. So again, it's the same rules are going to apply here, but this is where you would want to find your longer term entries. So you see what you could have done right here is you could have gotten an entry at this crossover here. Now, again, you would have gotten stopped out here, right? So, I mean, you would have gotten stopped out, and then we had that crazy explosive move. But these are more of like a longer term trade, and you could have gotten your price when it crossed over, and then you put your stop loss. This one's not a good example because you'd have gotten stopped out. But then it ran to the upside. You know what I mean? So, I mean, same kind of here with this one. So this is more of a longer term view of things, and like I said, this is how I'm going to look at the daily. Usually I mainly use the daily when I'm getting a longer term entry, just because, I have a long term view of things. So I don't mind, holding this position for 6 months, a year. But when I'm doing that intraday, scalp trading, just in and out, I'm using my EMA. But yeah, look, I mean, again, look at how many crossovers there are. There's not really that many crossovers. You see what I'm saying? But I mean, look, here, let's go back in time a little bit. See, when we crossed over here, you could have gotten a short position here. Could have gotten a short position. And once we had that daily crossover, I mean, you would have killed it. I mean, if you would have gotten in, I mean, I'm not sure exactly where that crossover happened, but you figure 231, we went all the way down to 143. So that's why I'm saying this is more of a longer term outlook of things. And again, same with this entry. I mean, if you would have gotten in long when we crossed above, that was about $200, and we went all the way up to almost basically $300. You see what I'm saying? So again, it's the same principle when you're using the EMAs and the SMAs. It's just, the EMAs are going to be short-term trades. The price action is going to be super quick. But when you're looking at a long-term outlook, like, hey, I want to buy Meta, I want to buy Tesla, I want to buy Amazon for, a number of days, a number of weeks, that's where you can get your entries right there and your exits right there. Like if you would have seen this crossover over here, 304, you could have sold your position. Let's just say you bought at 200 or something like that. You could have sold your position and at 300 and then bought back down here. You know what I mean? So yeah, that's pretty much how those work. All right, so that is it for learning SMAs and EMAs. One thing I didn't show you is how to put them on your chart. I should have done that at the beginning of the video. So I'll do it now. So what you're gonna do is you're gonna come up to these indicators here, and I already have them in my favorites. So you can feel free to pause the video. But this is the one that I'm using. Oh no, sorry. This is the one that I'm using for the EMAs. So it's by this person here. Um, so if you just type this in, EMA 950, 100, 200, it'll be by this person. And then the uh, SMAs that I'm using is you just type in this right here, simple moving average, 50, 100, 200, and then it's by this person right here. Okay. Now, how you are going to set those up on your chart is you're going to go into this little tab, this little drop down tab. And again, these are all the ones that I have right now, but you're going to go into the EMA right here. And then what I'm doing is I took off, so you can see if you put these on the chart, see how more of them are coming up on the chart in the background. I don't use any of these, so I just put these, I just take these all off. All I need is the 9 and the 21. You can change the color, whatever color, whatever style fits, whatever you want to use. Let me go back to it. So you can use whatever color you want. You can go to the 21, use whatever color you want, and then that's how you do that. And then same with the SMA. You're going to come over here and uncheck mark the 100. I don't really use the 100. Some people do. I don't. But you can, again, like I said, if you want to go on YouTube and start exploring which EMAs best fit your style, then I encourage you to do so. Go do your own research of what EMAs will fit your best trading style. But for me, I use, like I said, the 9 and the 21 EMA, and then I use the 50 and the 200 EMA. Okay. So, again, same thing here. There's the 50, there's the 200. You don't really have to mess with any of this other stuff. I don't. And then again, you can change the color for whatever color you want. So again, that's it for this lesson. You can use those, like I said, like I showed you, as a support and a resistance level, just like you would these lines up here, like I showed you. And again, yeah, you can, if you integrate all the stuff that I'm teaching you, and you use your own style, and you're using these properly, and you're making sure that you're having your stop loss and stuff like that, and making sure that you're protecting yourself and protecting your capital, you should be profitable. You really should. Now, if you're using them, again, like I said, if you're buying, if you're buying down here, and you're not putting a stop loss, and that's why I really encourage a stop loss. And let's just say, for instance, you didn't put your stop loss here, and we end up doing that thing, and you're going to screw yourself. So you make sure you're always having your stop losses set where I told you. Like I said, you find your entries. If it doesn't work out in your favor, then it's time to pull the plug on that trade. Now, one thing I will say is, just as I'm still here in the video, I will always encourage people to think of a more longer term view than just making these quick little trades. Making these quick little trades is fun, and you can make a ton of money, but your view should be long term. Because especially if you're a new trader, you're gonna find yourself getting wrecked quick. Okay, so make sure that your view is long term. And again, I'll say this, when the markets are open, what you should do is, instead of playing with real money, just fake it. Just do what I showed you, on the 5 and the 15 minute, and pretend like you're going to get your entry. You know what I mean? Pretend like you're going to get your entry up here. Pretend like you're going to get your entry up here, and see if it works out, and then be like, okay, cool, I would have won. And then once you feel comfortable enough to actually do it, then do it. Okay, so that's it for this lesson. I have plenty more to come, but I hope this is informative. Okay, so we'll see you in the next one.